All right. Good morning, traders. Welcome to Price Plan Profit. My name's Melissa, and on Saturdays, I do a live session where I go over the overall market, what I'm looking for next week, as well as some potential swing trade opportunities that I will be watching for. Now, if you don't mind, take a quick second, hit the like button. It only takes a minute for you, but it really does help the channel and this video get out to traders that need the information. So, first off, you're going to notice my background's a little different. Today is my younger brother's 51st birthday, and he lives in Jacksonville, Florida, and the family came over to Jacksonville to celebrate him today. So I'm coming live from Charlie's house. Those of you that are in the trendy or SPX rooms at Simpler Trading, where I trade live every day, you know Charlie. He's in the rooms. And so it was a surprise. We came over to Jacksonville to celebrate him today. So I'm excited to do that once we finish with our swing trade prep setup session. Now, first, I always like to start the day, the week, the whatever by looking at the ES and NASDAQ futures and the Dow futures just to get an idea of what the market did. And you can see here on the futures chart that price closed yesterday and last week inside of a demand zone. That is the green rectangle on my box. As a supply and demand trader, when price moves into a demand zone, that is when I'm looking to go long or buy calls. So price did close inside of this demand zone. This demand zone was tested a couple of weeks ago. We find ourselves back down here. We did create um, some selling pressure here on not this week we just finished, but the prior week's candle. And you can tell that by that big topping wick. That gave me a warning this week to be aware that we could be in for some downside price action because the selling pressure overwhelmed the buying pressure up here. In other words, there weren't enough buyers at 7,600 to overpower the selling pressure. And so price indeed came back down this past week. Let's look at the daily chart here, and you can see that evidence. This candle here is where we left supply that was created back at the beginning of June. We left supply here on Tuesday, and then Wednesday we had an inside day followed by a down day on Thursday and another down day on Friday. Now, a very important key Fibonacci level that price did close on the ES futures chart above, and that's going to be right here at the golden Fibonacci level of 73.91 that is lined up almost perfectly with the daily 50 simple moving average. All of that to say that right in this area where price closed 73.91 to yesterday's low or last week's low will be a key area that I will be watching at the beginning of the upcoming week to see if bulls are in control of the area. Let's just say 7,400 to 7,350. Huge value to watch into next week for me. I want to see, do bulls control this zone or do bears control this zone? If the bulls control this zone, then I would be looking for price to push back up to 74.76 by 7,500 and possibly back to the supply zone of 75.41 to the all-time high, 76.49. All right. If, on the other hand, bears control the 7,400 to 7,350 level, then I'm looking for prices to come back down to 73.30, 72.79, and test the low down here near 7,200. So it is an if this, then that for me as far as next week goes, and especially going into Monday and Tuesday. Now, remember, as a reminder, next week is a 4-day week. That means that I'm even for my swing trades, I wouldn't be choosing next Thursday's expiration. I don't like 4-day week expirations. For some reason, I just prefer, I feel like the price action is a little different than what we are used to trading. And so if it's a short week, a holiday week like we have next week, I'm going to go out to the following Friday's expiration or even the July monthly expirations. Okay. So just to let you know that when I'm talking about my swing trades, it will not be next Thursday's expiration for me. Okay. All right, this is the key area I will be watching next week. And if you're in one of the rooms at Simpler Trading with me, you will hear me talk about this key area a lot. A little bit smaller time frame would be the 4-hour chart here on the ES futures. The 4-hour chart, there's that key Fibonacci level. The low that I had marked here, 73.66, we did make a lower low than that on yesterday. And so now that new low of 73.60 is the low I'm watching to see if it remains the pivot low and we turn up from here. But as you know, if you were trading last week, Tuesday, Wednesday, Thursday, and even Friday, almost every single day we closed right about at the same place. So we got some range from about 7,500 to 7,360, about 140 points. But for 4 days, we traded in that range. It was not the easiest week to trade if you are looking for continuation moves for sure. All right, now let's look at the NASDAQ chart. The NASDAQ, of course, is your big tech names primarily. And the NASDAQ came right back down into the demand zone, the bull channel on the weekly chart, key Fibonacci, key moving averages, and demand. All of that to say I am looking for buyers to step in this area, but this zone has been tested and the move out of it was not super impressive. So all of that to say, I will be watching for buyers in this area, but I'm realistic in the fact that if we see weakness next week, I cannot be too overly surprised. This key 28,227 on the NASDAQ, that is the low that was established inside of this demand zone 2 weeks ago. That's a huge level if bears can get price below there, or do bulls allow this pivot low to remain the low and then we go up making new all-time highs. Don't know what's going to happen and I try really hard not to speculate what's going to happen. What I do know is the levels I want to be a buyer at and where I want to be a seller. Now I want to show you on the NASDAQ chart how we barely closed below the 618 here. Barely. Not totally below it, but the day's candle, Friday's candle, did close below 29,300 by 17 points. That means we have a daily candle close below the 618. Now, let me just say, If the bears keep price below 29,300 next week, then I'm looking for price to come down first to right around 29,030. 28,905 in this area would be the next target to the downside on the NASDAQ futures. And then below there, this demand zone at 28,582, all the way down to the low back here on June the 9th. That was my anniversary. So, if this, then that. If the bulls reclaim this 618 after we closed below it, but not really anything that I would be alarmed about. If we can reclaim 29,300 and we start heading back to the upside, the immediate resistance is going to be right where we opened on Friday, which is 29,742. Then above there, 30,090. And then back at supply, 30,662 by 30,975 and a half. Now this is a supply zone. It is an inside and down candlestick structure. I don't have it marked all in red because the move down was not big. But, and by big, I mean like this imbalance candle here, this is really not imbalance. So I know that there is resistance here. I know that there is supply here. I just don't have it a big red supply zone on my chart. So next week's major level to watch is Campbell's get above 29,300 and then hold it as support on any pullbacks. Same for bears. Can bears keep price below 29,300? Can we take out Friday's low? If so, I'm looking for price to come back down and possibly come back down to the demand zone. All right, the 4-hour chart on the NASDAQ is going to look very similar. Same key levels here as far as what I am watching. You can see that we do have 4-hour demand. It's lining up with the daily demand. You got a tested zone here. You do have imbalance moves out of this demand zone, but it has been tested before. So I'm looking for buyers to step in here, but I'm not blindly trading this demand zone. Okay. All right. And then last but not least is the Dow. I've been doing a little more work in the rooms with the Dow because, well, it's important. I watch it. And so I figured, let me show you what I'm seeing on the Dow. Now, first off, the Dow is stronger than the NASDAQ. We have seen some rotation. In particular, when I go through my watch list for next week, you're going to see names in healthcare and financials and industrials and some consumer discretionary because there's been some rotation into those less glamorous areas of the market as big tech has taken a little bit of a break here. Now, we did create a big topping wick again on the Dow. But what is encouraging is notice that the Dow closed the week above where it closed the prior week. That is not the case with the NASDAQ. That is showing there is strength in the Dow Jones. Okay. Nonetheless, these topping wicks remain selling pressure. This is where there were more sellers than buyers, so you need to be aware of that when trading Dow Jones focused names, healthcare, industrials, financials. Okay. All right. I will be watching last week's low, 51,712, to see if that holds as support. As far as the big resistance, going to be the topping wick of this candle by the all-time high on the weekly chart. If price breaks down and we create a new low, a lower low than this past week, then I'm looking for the gap fill down here at 51,237, which lines up with the 23.6 Fibonacci, and then possibly back down to the demand zone of 50,796 that lines up with our 9 EMA on the weekly chart. All right, daily chart on the Dow Jones. We came back after creating a big topping wick on Thursday. The Friday candle did pull back into kind of the base of this rounding bottom on the daily chart on the Dow. I'm looking for buyers to step in if indeed the Dow is going to maintain the strength this week. This is a zone that I'm watching, and because my watch list does have names that are in financials, healthcare, consumer discretionary, and industrials, this zone matters to me. This is where I'm looking for the names on my watch list to come into their buy zones and the Dow to maintain inside of this level, or at the very least above the daily 21. If that happens, then I have confidence in the names that I would be trading to the upside. And of course, I would be watching right here for selling pressure. If price gets up here in the Dow and I'm long some of the names on my watch list, I need to consider trimming, taking some profits here. All right. All right. Let's get into the names that I have on my watch list for this week. Let's start with Carnival Cruise Lines. This is a name that I trade off and on. I've traded it a couple of times this year already. And I'm looking for some pullback in order to go long here. I would not go long where price is at because we're right at an area of resistance here at about 29.30. So I'm waiting patiently for a pullback. Now, I want you to notice that here on the daily chart, all of your key moving averages are just in a big, huge mess right here. But the positive thing is the daily 21 has now crossed back above the daily 200. That is a bullish sign. We are just in a low compression daily squeeze, not an ideal squeeze right now, but nonetheless, we're getting some compression here. If price pulls back to the bottom of this area and you're looking for a more aggressive entry as far as my process goes, that more aggressive entry, I'm going to put it as a gray zone here on the chart, is going to be about 27.86 by 26.95. It's about $1 worth of risk. You have some key moving averages in this area. This is where my lower weekly edge is, which equals a playing field of demand on smaller time frame charts. And you have the daily 50 down here, which a few days ago we came back, we tested, and we popped right off of it. So a more aggressive buy zone is going to be right here, this 85-cent range. As far as reward, you got about $1.50 to the upside at first target, and then ultimate target would be the supply zone right up here. All right. If this zone doesn't hold, I would take my stop unless I see that price is in this demand zone. If price is in this demand zone and I'm trading this zone here, I don't want to stop out in demand. So what that automatically tells me is if I choose to trade this zone right here, I would not use anything more than half of my typical allocation. All right. Very simple. Reason why for me is because I have a demand zone directly below 70 cents below. It's a wide zone, and it is a zone that I would need to not take a loss if price were inside of it, but consider adding to my position. For that reason, if I trade this zone right here on Carnival, I have to leave half allocation to add with confirmation in this zone, and then my stop would be down here. All of that means that I have a pretty wide stop for a name such as Carnival that the weekly ATR is only about $2.50, $3. All right. What I'm saying is if I'm getting long up here near 27 and my stops all the way down at 23, I have to consider July monthlies at the very least, but honestly, I would go out to August monthlies for a trade like this. All right, targets are 29.31 and 30.76 by 31.60. So that would be the idea for Carnival. I'm not going to do a set and forget trade here. What I mean by that is I'm not just going to have an order setting to go long when price gets there. I will create an alert that will go off if price gets there. I know to look at my Carnival chart and make my decision on going long at this zone or simply waiting. If the trajectory down, if the candles are very large and strong momentum to the downside, I will not start a position in this zone. If it's just a slow move to the downside, then I will start half allocation position here. Okay. All right. What do we have next? CSX. This is an industrial name, and it's one that is moving. But it's at the top of the chop. The trend is definitely bullish on this name, and this name has a wonderful, strong, ideal squeeze that could fire to the upside. What I'm looking for is a pullback into demand, and that zone for me is 46.37 to 45.15. Then I'm looking to take my profits right up where price is right now. Why? Because this is the first area of selling pressure. All right, so that would give me a risk here of about $1.15 and a reward. Sorry about that. A reward slightly greater than a 1-for-1. So that would be the first target somewhere around $47.60 to $48. Then above there, we just have Fibonacci extension targets above that I could use for my targets. So I will have an alert set here on CSX on a pullback. Of course, paying attention to what the Dow is doing at that time as well. If it is inside of that buy zone, then and CSX has pulled back to its buy zone, that gives me index and confluence with the chart. Now let's look at MGM. On the daily chart, you have demand, a buy zone for me at 47.55 to 45.24. You got about $2.25 of risk right there. You got about $3 reward. So I like that the risk is less than the reward on this name. My first target is $50.56. Second target is 52, then 55, and supply all the way up at 60 and a half. Now, this name is also just getting into a squeeze. That means for this name, I would like to give myself extra time going out to the August monthlies potentially. Okay. All right, that is MGM, the buy zone. Sorry, if you don't know, in any zone that I'm giving you as a buy zone, the stop will always be the bottom of the zone and a daily candle close below it, unless I'm trading off of a weekly chart or longer. All right, but my stop is a candle close below here. I don't know exactly where I would enter the trade, right? It could be at 47 and a half. It could be at 46 and a half. Either way, when I do enter the top or the entry to the stop is my risk. And then the entry to first target is going to be my reward. So that's how I calculate if the risk to reward is good. If it's better than a 1-for-1, I will take the trade. If it is not, the trade is not for me. I don't take the trade. All right. So that's the trade plan for MGM. Now let's look at Merck. We had a great trade on Merck. I am out of it, but would be interested in buying a dip on a pullback. Merck has a higher supply zone above at $32 by 132 by 134.63. Now we do have resistance here and here. If price pulls back to my buy zone where I have demand, that would be great, but it is on fire right now. If I just measure the Fibonacci's here, and I use my favorite Fibonacci zone to look for a long position from, it would be the 50 and the 618. I have moving average confluence there, but on the daily, I don't have candle structure confluence there. So I would go and look at a 4-hour chart to see if on the 4-hour I have the candle structure confluence. And do you see how I have that beautiful candle structure confluence? That means that this zone becomes a optional zone to go long from for me on a pullback on Merck. So if I'm trading from this zone here, 120 to 118, I know I have $2 of risk and the reward is 6. That's a good risk to reward. That's a 3-to-1 risk to reward, a very nice risk to reward there. Now, do I get a pullback to 120? I don't know. All I can do is have my alert set in there. And if I get the pullback, I would consider taking the trade again. Again, I have to mention, you notice that this zone is close to this zone. That means if I'm going to go long in here and my stop is 118.14, but price comes down to a demand zone, I need to have allocation because I don't want to stop out in that demand zone, right? That means in this zone right here, I would be trading half allocation in the event there is further weakness back to the demand. And that means I need to have plenty of time to expiration. going out into August, and only half allocation at that first zone. Okay? Their targets are again 126.90, 129.93, and then 132 to 134.63. So that would be the new trade plan for Merck. Now let's look at a healthcare name that on the bigger time frame, it looks like Dookie. All right. It came up and it made a high back in April, and it has sold off from there. But it sold off right into demand. And do you see the demand on the daily? This zone is actually off of a weekly, but I want you to notice that this is a demand zone that was created back here in August of last year, almost a year ago. Now, on Friday, you got a good pop, a very nice engulfing bullish candle. Does price turn around here? The 2431 is an important level on my chart because it is a yearly edge mid. I want to see price get back above 24.31. If I see price get back above 24.31 on Pfizer, and I'm just trading this as a trade out till July or out till August, then I would say I'm targeting first target 25.12 by 25.58. Then above there, these moving averages that are all stacked here at about $26 to $26.25. You can see the further targets to the upside in the event that I'm trading this out longer term. But I want to see price reclaim 24.31, then my stop would be down here, and my first target is going to be about 25 to 25 and a half right here, and then 26.25, then basically $27, and then further targets to the upside. Okay, so that's the idea for Merck, and really Merck is more based on this weekly chart, and you can see the weekly consolidation point here before this big huge bounce. And this candle is what I'm building this trade off of. The yearly edge mid and this big imbalance candle that price has pulled back to, and we've gotten that initial bounce, but I need to see price above 24.31. All right, so that's the trade chart for Pfizer. Now let's look at a financial name via SoFi. SoFi is in a neutral trend for the year. You can see it up here, but it's very bullish on the monthly, and it finished the week neutral. Now it did close right at resistance. Okay, and your demand zone and your supply zone on the daily chart are very close together. That means I need to be a buyer down lower on the curve. 1682, 1566. That's about $1.20 of risk. I've got about $1.50 reward to first target, and then I've got these additional targets above 19 and a half basically to 20 and a half. So I would need a pullback in SoFi. Now this name is in an ideal squeeze on the daily chart, and the histogram is trying to move positive here. Okay, you can see the white arrows on my squeeze indicator down here. You see it says it's in an ideal squeeze, and I got the very first bar of positive momentum there from dark blue to light blue. So on a pullback to this area, I would be a buyer with a stop down here, and I'm targeting first the bottom part of this supply and then targeting the upper part of this supply. Ideally, I would like to have a runner position on that cannot lose any money when this squeeze fires, and then I can ride the momentum of the squeeze firing to the upside potentially and even take out the upper yearly edge at 2067 and possibly higher. All right, so that's what I am watching for SoFi going into next week. Now let's talk about Uber. This is another name that I can trade in the industrial sector. Now, Uber has taken a beating. It's actually below its daily 200. I don't often trade names to the upside that are below their daily 200, but Uber does have the daily squeeze that has shifted momentum to the upside. So a pullback back to 70.62 to 67.19 would be the trigger for me to buy. And I'm targeting the first target 75.38, 77.05. That gives me a risk of approximately $3, $3.50, and a reward of 5 to 7. Then my target to the upside is this supply zone 80.48, 83.50, and 88.24. All right. So that would be the idea for Uber. And now, last but not least, is another financial name. Now, financials do report earnings starting in the middle of July. You got to be aware of that if you choose to trade some financial names. Just be okay knowing when they report earnings. The financial sector has shown relative strength. Wells Fargo is one that is affordable for me to trade in a small account. My demand zone is lining up nicely with the key moving average of the daily 21. And that demand zone is going to be $82 to 80.83. Then I'm targeting 85.86. 88.17, 89.97, and 91.63. So good risk to reward. I would choose the July monthly expirations. I would only carry this trade through earnings if I have taken enough profits that the remaining contracts were free for my account. All right. Otherwise, I would exit before earnings. Okay, so I made it through all of the names that I will be watching for next week. They include Carnival Cruise Lines, CSX, MGM, Merck, Pfizer, SoFi, Uber, and Wells Fargo. I will be choosing at the very minimum the July monthly expiration, and for some of them, August monthly expirations. Again, I will focus more on intraday trading right now as the overall market is kind of just in a place of which way does she go, boss? Which way does she go? Does she hold the key area 7,400 to 7,350? Does that hold as support and she's headed to supply? Or does that prove to be resistance and bulls are not defending that area and price is heading to demand? We're kind of in the middle there, so it doesn't lead to me wanting a heavy focus on swing trades. More heavy focus on intraday trading, which I do every single day in the rooms at Simpler, and I use SPX to trade. So let's look at the SPX swing trading zones that will be important for me this week. All right, let's just focus on these zones here. The first zone is going to be a key area that I wouldn't do a set and forget type of trade here because it's been tested multiple times, long before June 9th and 10th and 11th. It was created back before, all right, back in April. So, that being said, if I get a pullback in this zone, am interested in trading it again if price action dictates that buyers are stepping in and overpowering the sellers. I would be looking for my confirmation process. All right. If I go long from this zone, I have some immediate resistance. And that's going to be right here where for 4 days we just created topping wicks, right about 7,400. That means if I trade this zone, 7,400 would be a target. Then back up to the supply zone is the ultimate target. Let's talk about the supply zone. Because you created supply, you bounced up into it. Prices have rolled back over. If we get a bounce up into it again, it would not be a fresh test. So I would wait for confirmation before going short. Then on the way back down, that 7,400 is a key level again on the way back down. Then 73.20, which is your lower weekly edge by the bottom of this zone 72.21. This would represent that next target to the downside. And finally, all the way back to the demand zone of 71.61 to 70.46. If price falls from this supply zone to this demand zone, then I would be looking to exit my puts and look for calls to buy the dip in the demand zone. On the way back up, what was support becomes resistance, so it would be an area to trim. Then 7,400 again, and finally back up to supply. We just play it back and forth like this until something changes. Now, this is swing trade type ideas, and I've already mentioned I don't really like to buy a short week expiration. So my focus will either be on just day trading SPX next week, or if I'm swing trading it, going out to the following Friday's expiration. All right, guys? All right, I have time to answer a few questions here. So if you have any questions, you can put them in the chat now. I will answer those questions for you, and then I'm going to hop off and get to my family time and celebrating my brother's birthday. All right, green eggs and Cam. If price closes below a buy zone, close below for 1 day, close back up the next day in the buy zone with a lower time frame buy signal in lower time frame, is it still valid? Yeah, I would say yes, it would be still valid, especially if you get that lower time frame demand criteria. All right, green eggs and Cam. Mel, what would be your trigger for taking a trade out of a demand zone if the price retraces down into the demand zone? Do you look for candle close out of the zone, squeeze firing, etc.? So Norman, great question. I use my confirmation process, and it's fractal. I use it every single day. Day trading and scalp trading on 5-minute charts, and then waiting for confirmation on a smaller time frame chart like a 3-minute chart. But if we're talking about swing trades, right, and I'm looking at daily zones, then I'm not going to be looking at 3-minute candles for the confirmation. Instead, I go to in a daily zone, I'm looking at 2-hour candles for that confirmation. So I would just go to 2-hour candles. And what I look for, Norman, is I want to see, let's look back here. Uh, let me see. It doesn't matter. Okay, what I'm looking for is price to drop into this gray zone next week. If price drops into this gray zone and say the first candle makes a low right here at 72.64, I would be watching the next 2-hour candle to see if it creates a lower low or a higher low. If it creates a higher low, and let's say the body is sitting right here at about 72.82. All right, the body of that higher low candle, when price crosses above there, that's my trigger. Not when a candle closes above there. When it crosses above there, that's my trigger to go long. I would go long on the break of the higher low body, and then manage as I've already laid out. So that's my confirmation process in a sell zone, which this was actually one that we traded, right? This was what I'm looking for is a lower high. So you got a high, you got a lower high, then you got the break below the body. So that was the trigger. When this candle broke below this candle's body, it triggered the short. All right. And then here's another example recently from the sell zone or the supply zone. You've got a high, you got a lower high, and you got a break below the body. That triggered a short. All right. And that's what I'm looking for, Norman. By the way, I do have a video here on YouTube. Just search for confirmation, and you should pull up the video that would go into more detail. Okay. All right, guys. Thanks so much for joining me on this Saturday, June the 27th. I will be back in the rooms, of course, at Simpler Trading. If you're not a part of a trading community, I encourage you, please join us and I say us because we have the best community of traders out there. In the trendy room, in the SPX room where I trade live each day, it's not just about me and my trading partner, Trendy John. It's about the members in the room and how encouraging they are to each other. They share their insights. It is really just a wonderful community of traders. And trading can be very, very lonely. So if you don't have a community of like-minded people around you, I really want you to encourage you to please find that group of traders. Find you a good mentor. Find you a group of traders that are supportive and get connected so that you're not feeling isolated in your trading. I know it helped me tremendously. So I will be back with more videos this week. Make sure you're subscribed to the channel. And if you haven't already done so, hit the like button on this video. I will see you in the rooms or in future videos. Y'all have an awesome weekend.